This is our Forex blog for October 23rd, 2013, and these are our currency indexes, which let you see visually what each individual currency is doing. For example, the euro, the daily, weekly, monthly trend is strong on the bottom. It's above its hourly moving average. It's above its previous day's high, and therefore you're basically looking to buy this against a currency that's weak. The yen was strong today, however the monthly trend is still down. The pound became weak at 2. The dollar's strong. Let's take a look at some of the other ones. You can see the Australian and New Zealand are weak. The CAD becomes weak after 9:30. And these are some of the currencies that you can sell against strong euro. So let's take a look at Euro Australian. Strong euro, weak Aussie. You're looking to buy the Euro Aussie, and like is bound to happen, it's going to go up. The currency indexes make it very easy to see that. You can see it right at midnight. The Australian went from strong to weak. That caused this big move up. You're looking to buy pullbacks with your stop underneath the low. You didn't make much on this trade. Probably 20 pips on that trade, 15, 20 on this, and so on. Let's take a look at some of the other ones. Euro CAD, weak CAD. Remember, around 9, 10 o'clock, the CAD got weak. You can see that this currency was in a very tight, range all day, and it's trending down. You have a trend line break right here, and a lot of times trend lines, once broken, they kind of come down and retest it here. Once it doesn't get back underneath that trend line, it's pretty high probability trade right there. Or you can buy the breakout of this, and you can see that it just exploded up. And once a currency goes above the upper containment band, you're pretty risky. It's pretty risky to continue to buy it. Let's just add that to the chart real quick. I have videos that explain each of these tools individually, and I use the digital signal processing 1.5 and 2.0 bands. These work on the indexes as well, and you can see it was statistically way, up way too much here at 10 o'clock. So buying this little pullback here and here is relatively risky trade. Most currencies do not go outside their bands. In fact, it's a pretty wonderful trade at the bands counter trend majority of the time. Notice right here, obviously pretty explosive moves this week, but the majority of the time this is made of the 20-day maximum volatility. We can go back a little farther, and you'll see that most times the bands contain price, contain price, contain price. It can go a little bit below, but typically it's going to reverse pretty violently. You can see it reversed here, went a little bit underneath it, and fib targets when you are underneath the bands are extremely profitable. In other words, when it goes down, the fib target, when it's way underneath the band like that, almost always causes reversals. Upper band hit, lower band hit, upper band hit. You can see this really is a pretty high probability tool. But nonetheless, when you have one currency that's strong and another one weak, you're going to do well. Now you can see the Swiss also is very strong today. So you can sell the Australian Swiss. It's going to go down. Now this one, fell pretty radically. Typically after the first wave, you can look for a short. And if it's right at the lower band, you can obviously give it a shot. This trade right here didn't really pull back enough. This one here is decent. This one here is decent. And you can see at 1400, it's not going lower. If you look at the Swiss at 1400, or actually even 1300, it double topped here, and it's just kind of going sideways. It wasn't able to take out that high. And you can just draw trend lines on the individual currencies. When they break the trend line, most times they're going to reverse. And because you can actually see each individual currency, you can get a feel for what its trend is. And you can, if a currency is down too much, and then it breaks the trend line, like 11 o'clock right here in the New Zealand, which currency is maybe up too much and likely to come down at 11 that you can trade this one against. 11 o'clock, the Swiss is up too much. So you could look for a New Zealand Swiss buy at 11 o'clock. It's very likely to get a little bit of a bounce. And you can see it did. It went from 74, maybe 70, all the way up to 93, 23 pip move right then. Now, a lot of people don't want to learn all that is required for Forex trading, although I have made it quite simple to trade. You know, you use the currency indexes to spot which ones are strong. You buy them against the weakest ones. And there's only two methods that we look for: pullbacks and sideways rectangle patterns. I've been spending the last probably 4 or 5 months working on automated trading systems for my own accounts, and I'm releasing the signals in our software. And this is what it looks like in the euro dollar today. You can see, you know, you'd be in here at the close of the bar. It went up a little bit, so probably would have lost 3 or 4 pips on here, made 2 or 3 pips, made 20 something pips here, maybe 5 or 10. Maybe you made 5 or 6 or lost 3 or 4, made 20. You know, this one worked, this one failed, this one was a huge win, nice win, loss, nice win, you know, loss. If you add up the losses, you know, maybe you would have lost a little bit on this one, 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 but you can clearly see the ones that worked were significantly bigger than the losses. So, you know, when you have a couple big wins, small losses, you're going to do well trading. And you can use this in conjunction with our currency indexes. So if the euro is trending up and the dollar is likely to go down, which happens frequently, you can look to buy the euro dollar. Let's scroll these back. So you can see that the euro is trending up, the dollar is trending up. From about 3:30 to 5:30, the dollar is above the upper containment band, so it's very likely to reverse. The dollar's likely to, you know, get stronger. I'm sorry, the dollar, which is strong, is likely to get weaker, which is going to cause the euro dollar to go up. So around, you know, 4:30 to 5 o'clock, and afterwards, you're looking for buy signals. You know, when you get a buy signal down here, you might want to wait for the little choppy action to get hit, or you can get in, put your stop underneath here. You might have got stopped out. You get in again, and you wrote it up, you know, close to 45 pips. There's a lot of ways to trade with our software, whether you take this every signal, or if you use the currency indexes and longer term charts to get a feel for, you know, what direction you want to position yourself in, and then wait for a signal to give a buy or sell in that direction. That's the way I trade personally. You know, if I want to buy the euro dollar, I will wait for a buy signal, and then kind of, if it's going down, if it's really extremely weak right here, I might wait for it to go above these bars highs and get in. If I get a sell signal right afterwards, sometimes I exit half the trade, sometimes I kind of move my stop to break even. In this case, you know, it would have kind of just went sideways for a while and exploded up. And you can always exit your trade and get back in it. Oftentimes there's another buy signal. You know, if you saw this explosive move up, you bought here and lost a little bit, you got here, you got your loss back plus extra. And anytime you see a double top, you know, with a sell signal, it's very high probability. There's about 125 different patterns that show up in these signals. They're all rare. They all have about 10 to 30 different rules that have to happen for any of them to show up, and they all use our statistical tools. So, you know, feel free to use them. They are getting more and more accurate each week.